Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.
Good afternoon. Welcome to Under One Roof MTL. I am Robin Flynn. Super happy to be back with you. We're just ironing out some kinks here in studio. It's been a couple weeks since we've been here, but I'm super happy to be back with the guys. We got LJ Aguinaga of LJ Realties. What's up, LJ? And we also have Fred Pichette and Martin Spalding from Fred and Martin Mortgages. How are you guys doing?
Good afternoon, Robin. Doing great, thanks.
Awesome. Martin, I think you need to mute speaker on your phone because we are getting an echo from you.
Because I am muted on my phone, so.
Yeah, well, we're hearing an echo, so maybe you want to turn that off.
Your microphone, not your speaker. How about that?
Well, when I speak, I can no longer hear myself, so that's perfect. All right, guys. Like I said, been a couple months, so we're easing back into things. Not so bad. Happy to be back with you. We'll start with our trivia question of the week, brought to you by Felix and Norton Cookies. Super happy to have them back with us for Season 2 of Under One Roof MTL. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. If you're the first person to text in the correct response to 514-800, you will receive delicious Felix and Norton Cookies delivered straight to your door within a few weeks. Sometimes people win and they're like the next day, where are my cookies? Give us some time. You will get your cookies, I promise. Our question this week, what legal document describes the boundaries and state of a property in Quebec? If you think you know, 514-790-0800 is the number to text. Guys, usually we start this segment by talking about what's in the news this week. But since we've been off since June, I think, May, there's a lot of things that have happened. Interest rates have come down a few times. There's a lot of stuff going on. So let's chat about everything that's happened since the last time we did a show. Interest rates continue to drop. It looks like, Fred, you're going to be right. You were the only one who said that interest rates would drop by a full basis point before the end of 2024. We're already halfway there, and it looks like we're going to have another drop.
Well, maybe, Robin, I'm a little more optimistic. Normally, I don't like to bet on interest rate because I don't have a crystal ball. Nobody knows. But all the indicators out there were like pretty clear that rate cuts were down the road. I'm glad that it happened because it really helps borrower for the future to, first of all, to get a lower monthly payment. Also, it will increase affordability, and we're probably going to have great refinancing option, which is it's pretty good news.
I know, as somebody on a variable rate mortgage, all of these drops that have been happening are a lot of fun as I've been watching my monthly payment come down, not by a ton. It's like $30-40 every month, but the $30-40 is better in my pocket than the bank's. You know what you could do with $30-40? That's take a guess right there. Gas has come down too.
Robin, but there was a bet, wasn't there?
There was a bet. I believe LJ said that it would be 0.5 by the end of 2024. Fred, you said one full basis point. I don't remember, Martin, what you had predicted.
No, I'm just remembering the bet. And because it's such good news and that Fred is going to be right, I think the bet was that if Fred was right, he would take us all out to Moisha's because it would be such great news.
Oh, wow.
That's how I remember the bet.
I somehow remember us owing Fred coffee, but...
Right. But guys,
I
maybe
remember dinner for all of us.
Yeah, but maybe I didn't win yet because we have two other announcements, one in October and one in December, and it might go down by 0.25 again, which is it might end up 2024 by 1.25%, not 1%.
But we were playing prices right.
Well, because you know what they're saying right now? They're saying in October, 25 basis points, and now they're saying in December, 50 basis points.
Well, again, it's all good news for borrower. That's what I'm happy about.
Yeah, we would like to see them coming down. The only issue, and LJ, you could probably speak to this, is that as interest rates come down, interest from the public increases. More people are willing to buy houses right now, which means the price of houses is going up, right?
So we're definitely going to start seeing that supply and demand come into effect here, right? As interest rates come down, well, we're going to have more demand joining into the market. And consequently, with a lack of supply that we've been seeing, we're going to see prices start to go up. We're going to start feeling that pressure, and we've already started to see it. We've started to see more multiple offer situations. It's still not the norm, but we're definitely seeing more and more of that right now. So a lot of consumers and buyers who want to start getting into the market, we've been getting a lot of phone calls for people asking to start their process to get pre-approved, connecting them with Fred and Martin, and even just, I mean, today, like I mentioned, I think on my Instagram feed earlier today, I'm seeing properties for the first time with 2 new buyers right now, and that's today. And
So, LJ, are you sensing that the people that have been sitting on the sidelines for 6, 12 months are starting to get into the game and they're starting to call? And is it immediate, or they just want to get pre-qualified so when the season begins in January, February, March, that they're going to be ready, pre-qualified, and ready to go?
I'd say about 50% of the buyers are getting informed so that they're ready to go in the spring because they have their leases until July 1st next year and they just want to hit the ground running. And then the other 50% are people who either already own a place and are ready to make that move, or who have a lease that they know is going to be easy to transfer, so they're happy to start looking right away because if they find that right property, they rather get the savings today than deal with the higher prices and the tougher market conditions in the spring and summer next year, obviously.
Martin, you said something that I want to touch on. You said, are they waiting until January, February, March until the season begins? Is there a home buying season? Is it January, February, March? Is that when people typically start house shopping?
So in the Montreal market, we definitely see the highest concentration of sales in the February, March, April. And this again is backed by the fact that most people, especially first-time buyers, have leases until July 1st. So we actually go out, start seeing properties, close on something, if you will, February, March, April, May, and only take possession in early June, if you will. Give them some time to make a couple of small repairs or even just take a month to move out, because as we know, you pay your rent on the first of the month, but you pay your mortgage at the end of your first month. Therefore, you can actually get away without double paying, even if you have both properties for the month of June.
Very interesting.
I have another quick question for LJ. Are you sensing it from buyers and sellers? And let me explain that. Buyers who actually first-time home buyers or people that just want to upgrade their homes, but there are a lot of sellers that have been sitting in their properties wanting to move, but they're sitting on such great interest rates that they didn't want to forego that interest rate or that mortgage when they decide to finally put their house up for sale and move to another property. So are you sensing that there's activity on both sides, sellers and buyers?
There's been a lot of activity on both sides. This has been the strongest year for listings for us in our history, to be honest. I think our listing sales are up 30 or 40% compared to last year. And I'd say that one part of it is, yes, people obviously who had great interest rates that they didn't want to necessarily give them up. But a lot of those people who are upsizing, at least, well, they'll just port their mortgage. They'll take that, they'll get a blended rate, so they'll have their original mortgage for the first tranche, and then they'll have a second tranche with a blend. And I'd say more so it's the fact that obviously when interest rates went up, prices got compressed for a little bit. We saw them drop about 10% at the worst, if you will. And people say, hey, you know what? I don't need to sell right now, and I don't feel like giving up that 10% equity that I had right now. So let me wait till at least mentally I'm back to where we were in terms of prices, and therefore I don't feel like I missed out on anything. And that's what we've been seeing, and that's why we've been getting the phone calls now.
You're listening to Under One Roof MTL on CJD 800. I'm Robin. That's LJ. That's Fred. That's Martin. If you're curious if now's a good time for you to get into the market, or maybe you're looking to upsell your home, or maybe you want to downsize, talk to Fred and Martin. They're the guys to talk to figure out what you're eligible for right now. Head to fredandmartin.com for more information. You can contact them that way.
This is the Mortgage Minute.
The bank regulator is set to end the stress test for uninsured mortgage switches. This is your Mortgage Minute. Starting November 21, 2024, the Office of the Superintendent of Financial Institutions, the OSFI, will eliminate the stress test for uninsured mortgage borrowers who intend to switch lenders at renewal. Previously, borrowers had to qualify at the higher of their rate plus 2% or the Bank of Canada's benchmark rate. This change applies only if the loan amount and amortization period remain unchanged. It aims to promote fairness and increase competition among lenders, allowing homeowners to find better rates without the unnecessary barriers. The decision follows evidence that the stress test risks have not materialized as expected.
This is Under One Roof MTL. Let's just dive right in because what Martin was just talking about on the Mortgage Minute is super interesting, guys. Changes to the stress test. Homeowners no longer need to do a mortgage stress test when switching mortgage providers. It's a little complex, right? Because this also has to do with insured versus uninsured mortgages and previous rules that existed. Fred, can you sort
Yeah.
of bounce off of what Martin was just explaining?
Well, actually, if your mortgage come to maturity, and let's say you have a balance of $250,000, your property worth $500,000, and you're not looking to refinance, you're just looking to get, let's say, a good lender at a good rate, you do not have to apply with a stress test, meaning you still have to qualify, but we don't have to tag, like Martin says, a 2% on the rate to qualify you. Obviously, let's say you had started your mortgage at 25 years, 15 years left, and 250,000 is your balance. You still need to qualify on $250,000 and 15 years amortization remaining. Obviously, to be quite honest, there's excellent rate out there for people who has equity in their property and want to switch from, let's say, one bank to another. Obviously, we could really, really help you with that because most of the time banks will give you an offer that's not really, really good, convenient, and I think it's the right thing to shop around when your mortgage come to maturity.
Yeah, especially if you're with a non-traditional lender. That was the only way my husband and I were able to qualify when we bought our home was with a non-traditional lender. And then when it came up to maturity, we were ready to switch lenders, right? We'd had a couple of years of proving we can pay our mortgage on time, that we're able to make our payments not late, and we switched lenders as quickly as we could. And we're very happy with where we're at now. So there's definitely some advantage to shopping around. And the best way to shop around is to contact a mortgage broker, right?
Well,
Like Fred Bichette and Martin Spalding at fredandmartin.com. Also, some changes. The federal government announced a ton of changes this summer in an effort to try and make things a little bit more affordable, specifically for first-time home buyers. Young people are struggling to buy their first homes right now, but now you can amortize insured purchases or non-insured purchases for 30 years. Right prior to these changes, if you were putting down less than 20%, you could only amortize up to a maximum of 25 years, if I'm not mistaken.
correct, Robin. You're absolutely right. Now, the good news is starting December 15th, you could amortize an insure mortgage. When we say insure mortgage, an insure purchase, meaning when you're putting less than 20% down payment, up to 30 years amortization period, which is help first time home buyers to qualify. Also, if the rate continue to drop, that's another thing that's going to help as well because you need to still have to do the stress test, but you need to qualify on 30 years, which is good. And when you say first time home buyers, you're right, but it's not only first time home buyers. Let's say if you came out from a breakdown from a marriage,
Mm-hmm.
you could still be eligible. Also, if you're buying a new construction, you're also available. It's also available for you the 30 years amortization period. Or if during the last 4 years the borrower has not occupied as his principal residence a dwelling owned by himself or his current spouse or common law partner, he is available for the 30 years amortization period.
Wow. Martin, you must have been pretty happy when you saw this news. Do you think it's actually going to make a difference to help people buy homes?
Well, I think you know what I've got a cited example. So if we compare 25 years to 30 years, a buyer financing a home on the average right now, the Canadian average is 649,000. Over 30 years, let's say 4.09%. Monthly payment would be about 2,900 compared to 3,200 if he was to amortize it over 25 years. So that's a savings of $300 a month, which is additional cash flow, which can make a huge difference to a typical household. Over the 5 years, they would pay $18,000 less with a 30-year amortization. Their balance owing at the end of the 5 years would be about 545,000. So starting at 649, they'd be down to 545. However, there is a downside to this. Because you're amortizing over 30 years, you're actually stretching the interest that you're going to pay. So over the lifetime of this purchase, you'll end up paying more for the house because you'll end up paying more interest. So it's so in terms of cash flow reasons, it's a great decision. But if you want to get rid of your mortgage as quickly as possible and you want to own the house outright, the faster you can get this paid, the less you'll end up paying for it.
But I know I'm thinking, LJ, as someone with kids, I know you've got kids too, $300 a month. What would you do with $300 a month?
I mean, the list is endless. That covers insurance and a portion of taxes. You can really help offset. It can be extracurriculars for the kids. It could be the family vacation for the year.
Yep.
I mean, the list goes on and on and on. So while I completely agree that obviously there is no free lunch, there's going to be a give and take somewhere. I think that most young families or most first-time buyers using the free cash flow, having that available to them to get set up and get have a little bit of a cushion, if you will, because they're buying a property for the first time. There's inevitably going to be maintenance costs, whether that's a roof, some windows, a potential small leak or plumbing issue somewhere down the road. It's having that cushion of freedom to allow them to be a lot more comfortable when something unexpected happens early on. And then I think that after that first term, if you really set up and you're comfortable, and maybe your kids are a little bit older, but you've just done a better job budgeting, if you will, then feel free to bring that amortization down to 20 years instead of the 25 if you'd like. You can cut that however you want.
Or on the top of it, you can make extra payment to reduce the interest of your loan without touching the amortization period. You could also, invest your money for the full 12 months and making interest on it. And at the end of the 12 months, you dump that money towards the principal of your mortgage if something that you wants to do or wants to save interest on your mortgage.
That's a great idea.
Yeah, because there are some lenders that allow you to make double monthly payments, and the second payment goes right against principal. And on top of that, they'll let you, on the anniversary of your mortgage, on a yearly basis, on a yearly calendar basis, pay down up to 15% against the principal. So if you do come across some extra money, a bonus, or you're doing a side hustle, a part-time job, and you come across a little extra money and want to slam it against your mortgage, pick the right lender.
I think I recently did the math, and when you compare the 30-year amortization, if you will, and if you were to make one extra monthly payment, so an extra $2,900, if you will, annually, you're shaving about 5.5 years off of that amortization.
Yeah. Wow.
So if we take that 300 times 12, that would be $3,600, but you only need $2,900 of that to actually make a payment equal to shave off the 5.5. So really, it sounds like you're coming out net positive with an extra $700 by using that strategy.
And that extra $700, like you said, LJ, it's extracurriculars for your kid. I just signed my daughter up for dance classes between the 12-week fees and the leotards and the tight. It was $300. She's 2.
Plus, we're not even talking about berry season,
Oh my goodness. Berries were cheap for the summer, but now they're going back up in price. Right. It's going to be hurting me this fall. You're listening to Under One Roof MTL on CJD 800. If you want to get in touch with LJ Aguinaga, you can call or text him anytime. Maybe not in the middle of the night. That's just rude. 514-500-4040 or visit his website at ljrealties.com. Welcome back to Under One Roof MTL on CJD 800. I'm Robin Flynn. We're so excited to be back with you for a second season with Fred and Martin from Fred and Martin Mortgages, LJ Aguinaga of LJ Realties. Guys, is it a seller's market or a buyer's market right now? Now, usually when I ask this question, we're approaching NHL trade deadline, and I'm trying to decide if it's a seller's market or a buyer's market for the Habs. But now we're talking about the actual housing market. So let's go around, all three of you. I will ask the same question, and I'm curious to hear your thoughts, whether you think it's a seller's market or a buyer's market, and why. LJ, let's start with you.
I have the answer, so I think we should end with me.
Oh, you have the actual answer as opposed to an opinion. Fred, why don't you go first then?
I think it's going to turn out to be a seller's market very soon. If the rates continue to drop, I could say that I did a lot more pre-approval in the last 2 weeks than in the last, let's say, month. And I'm afraid that right now I think it's kind of stable, but I'm afraid that it turns out to be a seller's market in a couple months, maybe for 2025. But again, maybe LG has a better idea than I have.
Well, let's see what Martin thinks first. Martin Spalding from Fred and Martin Mortgages, what do you think?
I'm going all in. It is definitely a seller's market. Demand is strong and inventory is tighter. But let me just add, that's in Quebec. It's not the same across the country. So right now in Toronto, it's a buyer's market. So I want to hear what LJ has to say, but I'm going all in seller's market in Quebec.
So interestingly enough, we are most definitely in a seller's market in Quebec, and we, for the most part, across at least in the Greater Montreal area, never exited a seller's market. The reason being is the way that we calculate that is if we have 8 months worth of inventory based on the current absorption rate, then we're in a seller's market, and then 8 to 10 is going to be a neutral market, and then beyond that becomes a buyer's market. Now, this being said, even though we never exited a buyer's market, I can tell you wholeheartedly that for the last year and a half, we were in a buyer's market for the Greater Montreal area. We were not in competition. We were able to negotiate prices anywhere from 2 to 10% below asking price. We had time to think about it. We were able to do second visits on properties. So as far as I'm concerned, especially coming off of the COVID wave that we had, we were very much in a buyer's market from an emotional and kind of timing perspective when actually on the field, even though statistically it was a seller's market. Now, seeing as it was that, and the market's only heating up right now, it's only getting more and more into a seller's market, and it might become an overheated market, obviously, over the next 6 to 12 months. And that's kind of the trend that we're probably looking at right now. So while I don't have the full quarter stats, I was just looking at the September stats, and prices were up across the board. Yes, September over 2024 versus September 2023. But more importantly, if we look at the prices in January this year to September this year, in all three categories, on the island versus the Greater Montreal versus Laval, no matter how we look at the statistics, prices are up anywhere from 3 to 10% in every single category. So things are trending in that direction. Prices are back to where they were. Things have bounced back, and sellers are going to have their pick of the litter pretty soon because a lot of buyers are going to be entering the market now, and sellers are slowly entering the market. So not with the same rate, obviously, as the demand that we've been seeing.
Yeah, but
LJ, sorry, I got two questions for LJ really quickly. Are you seeing multiple offers? Is that going to come back? And my second question, I'll stack my questions. Is it true that property values, the average price of a house in Montreal is now $615,000?
Okay, so let's go piece by piece. Let's go with the second question first. So the average price of a single-family home for September on the island of Montreal was $775,000. That was the average price
You're
sold.
joking me.
Now, if I look at the Greater Montreal area, that number is $590,000. So it's really kind of specific as to where we are. Yeah, that's what we're looking statistically there. In terms of multiple offers, they're not back in full force, but for the bulk of the last year, I'd say we were seeing it about 10% of the time, 5 to 10% of the time we were seeing multiples, whereas right now, I'd say that we're seeing it closer to 20% of the time, right? We just listed a condo a couple weeks ago in the Plateau. It was listed for $499. We ended up getting 5 offers on the property, and it finally sold for over asking. And I think all except for one of the offers were above asking. And we're seeing this trend start up a little bit more. We listed another condo in Verdun 2 weeks ago again, got 2 offers on the property. Things are moving pretty quickly right now. Right. If things are priced right, people are out there again, and I think the property in the Plateau, we had something like 15 visits over the course of one weekend, and off we went, So we're seeing that trend start to pick up again, and obviously it's price dependent. We've got other condos that got one listed in the Old Port right now for 1.15, and although we haven't gotten multiples on it, in the first 2 weeks, I think we had 6 visits. So even different segments of the market, different things are still seeing activity, which has been really exciting. A couple listings that had been quiet for 6 months, really did not have all that much activity, ended up selling over the last 2 months for us, So people are back, things are moving, people are excited, and the real estate market is going to be a lot of fun to follow and to track over the next few months.
Fred, did you have something you wanted to add to that?
Well,
sorry, Fred.
I was looking out there, and I don't know if it's an impression, but I see a lot more property for sale than 3 months ago. Is that a perception or?
3 months ago is a tough time to compare because historically the Montreal market shuts down from Saint Jean Baptiste up until after construction holiday. Everyone is thinking about Montreal summers, going on vacation, spending time at the park. So it's not exactly a good reference point comparatively. We always see a pickup for the fall market. This is kind of traditional. September things took off again. Our office had 23 accepted offers in that 30-day period of September. It was insane.
Right.
After going with, I think we had 5 or 6 obviously for the month of August, So just to give you some reference point on that. So yes, a lot of properties are being listed. I think we've listed 5 properties in the last 2 weeks as well. So there's a lot of activity going out into the market. You are seeing more. I'm excited for this fall. I'm really excited to see where things are heading because people are calling nonstop every single day. We're meeting with buyers. We're meeting with sellers. There's going to be a lot more inventory hitting the market, but there's going to be more buyers to absorb it. So I don't know how much you're going to feel that.
Yeah.
And if you're ready to enter the market, by the way, call LJ. Talk to LJ. LJRealties.com is the place to go. You're getting tons of buyer consults, but there's always room for more, right?
Always. That's why we have the team. I can take care of all the buyers consults. We'll meet up. We'll go through the game plan for you. And either myself or somebody on our team will take care of some of the visits. We work together to make sure that you always have the best service service possible. And we're always ready to rock and roll to make sure that we can walk you through the entire buying process, because although it might be your first time, and even if you've done it a couple of times, we do this hundreds of times every single year. This is our bread and butter, and this is what we love to do, to really help people with the purchasing process.
Excellent.
So, LJ, if you were to give 3 pieces of advice to a potential buyer, what would those 3 pieces of advice be? Because you represent both buyers and sellers, right? So,
Of course.
you're a buyer. You're about to enter the market. I'm working with LJ. What's the 3 things you tell your buyers to prepare for?
First thing is we do a buyer's consult, right? Buyer's consult, we're going to walk you through all the costs, all the steps, what to expect, how it's going to go down. Second thing is you're going to get pre-approved. So I send them over your way. We're going to get you pre-approved so we know exactly how much we can afford. And we're not going to do a pre-qualification, none of that. We're going to go straight to a full pre-approval to understand exactly what we can afford, to know that when we draft an offer, it is a concrete offer. We're not going to have to worry about anything on the back end. And then finally, like I tell everybody who's looking to get into real estate, like anything you want to get involved in, you have to start studying the market a little bit. We have to start looking at what's available, what are things selling for. And sometimes people say, well, LJ, I really don't think I'm going to like some of these properties. But say if you've never purchased a property, or even if you have, when we're going to go see properties or even consider buying something, we need to get some mileage under our feet. So we have to go out and see some 5, 10 properties, even if they're not perfect, they don't check all the boxes for you. And sometimes people will feel bad. They're like, but LJ, I don't want to waste your time. I don't want you to come out and see something if I know it's not perfect. The only way we're going to know when we see the perfect item is when we've seen enough of the non-perfect items to be able to disqualify and qualify what's important to us versus what's not. So whenever I get that objection or even just that comment, and I really appreciate that people respect my time that way, but it's my job to make sure we can get out there and show you as many things as possible that obviously meet the general criteria of what we're looking at in terms of location, bedrooms, that has some of the parking, but we're going to see different styles of kitchens, different styles of flooring, different styles of bedrooms upstairs, downstairs, on the main level, backyards, noise levels, close to train stations, you name it.
Don't forget outlets. Some of the first houses we went to see, the bedrooms only had 2 outlets. That's impossible in 2024.
They probably had no ground either.
Yep, exactly. If you're looking at
Robin?
older properties, absolutely that's an issue.
Robin, I got a question for Fred now.
Yes.
So pre-qualifying, what's the most important thing when you're pre-qualifying? With documents.
Yeah.
Absolutely. We're going to get Fred's answer to that
I-
question.
I was about to say it, but
Yeah, let's wait. Let's set up a little, they call this in radio a tease, gentlemen. You're listening to Under One Roof MTL on CJD 800. I'm Robin with Fred, Martin, and LJ. Fred, before traffic, Martin asked you a very important question. What is the most important thing that you need for a pre-approval? Fred, what is your answer to that question?
I always say with documents. Why?
Documents.
Because with documents, it make it real.
But that's what I was alluding to, right? No documents, it's not a pre-approval, it's a pre-qualification, and we don't care for those.
It's just we don't want bad surprise for the client and for the realtor as well. Let's say it happens sometimes. People say, "Oh, I make $70,000," but when you look at the document, it's more 60. Well, 10,000 difference with high interest rate, with a stress test that need to apply, it makes a huge difference. It makes a difference. Like at the end, if you have the documents in hand, you can't go wrong.
And when you say documents, Martin, maybe you can weigh in on this. What exactly do you mean when you say documents? What is that?
Very straightforward. So a couple of pieces of ID, letter of employment, pay stub, T4s for the last 2 years, notice of assessment. That's it. Because a lot of people go online and they fill out these applications.
I will add, Martin, proof of down payment.
Oh,
Proof of down payment. Yep.
But a lot of people go online and they'll fill out all these random applications and instantaneously they get approved. And then they start to work with LJ. And as soon as they get an accepted offer, they've got a window to prove that they can come up with a proper financing.
15
and
days.
The problem is 15 days and sometimes it's 10. And so then the panic starts because they turn around and they go, well, I filled out this application. They said yes. And when they try to go and get their mortgages, they go, yeah, that was an online application. It wasn't supported with documentation. We can't give you the mortgage. And then the panic starts. And that's when they call us and we do it properly. So we get the documents, which actually support what you write in your application. And when we send you a letter of pre-approval, you can take that to the bank.
We love that. We love things you can take to the bank. And
Amen.
if you want to get a proper pre-approval process started, talk to Fred Martin. FredMartin.com is the best way to get in touch with them. LJ, we are bringing back my favorite segment of Under One Roof MTL. No offense to all the other segments. I love all the... I have no favorites. I love my children equally. Property of the week. What are we looking at this week, LJ?
Well, Are you looking for the perfect condo in Villeray? Check out this spacious two-bedroom gen, split over 2 floors with garage parking for just $549,000. The condo features open concept living, a private balcony, and is a modern 2022 construction. Just steps away from the Jean Talon Metro, Jarry Park, and the Jean Talon Market. Don't miss out and book your visit today. Now, for most people's favorite part of the segment, the favorite restaurants that are associated to the listing. Well, my favorite restaurant in the area, to be quite honest, I must say that this condo has the highest concentration of Peruvian restaurants located around it than anywhere else. So if you're looking to get your fix of Peruvian food, feel free to stop by Solimar, Ceviche 71, Pachamama, or El Gallo. Stop by any of these to make sure you get your fix taken care of.
I just had great Peruvian this week, actually. I was at Tiradito on Blurry, one of my favorite
Fantastic.
spots.
Yeah.
So good. Peruvian food is like
LJ.
so good.
I think I have a client for you because I'm in the process of pre-approving somebody right now in Villeray looking for a condo.
Wow.
And that's the price
Sounds
point they're looking for.
perfect.
Oh my gosh.
Maybe LG, you could bring them to Ceviche 71.
I'd be happy to.
And you guys can all have a great meal, eat some delicious ceviche, and find somebody their dream condo.
Break bread and do a deal. What
Sounds
better
like
combo?
everybody wins. Okay, trivia question of the week. People want to know the answer. It's very important. Brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center. That's 3705 St. John's Boulevard in DDO. Our question this week was, what legal document describes the boundaries and state of a property in Quebec? The answer is Certificate of Location. Nathan in Kirkland was the first person to correctly answer this question. So congratulations, Nathan. You are going to be receiving delicious Felix and Norton cookies delivered straight to your door, which is great because you don't have to go anywhere. You just open your door and you've got cookies. Delicious. Wonderful. Guys, we learned a lot this week. We really packed it into our first show. We crammed a lot of content in here. So interest rates are coming down. What are you seeing them at right now? What's the rough area, Fred?
Well, I see anywhere for an insured mortgage between 419 to 439, depends of the lender.
Wow.
With no restrictions, like good product. Like that's what I see lately, this week actually. But I think it's still going to go down again a little bit in the next few weeks.
We also learned that the government of Canada has changed the rules for insured mortgages. If you missed it, Martin talked a little bit about that earlier in the show. You can check out the podcast. It's on iHeartRadio, Spotify, Apple, everywhere, so you can hear what some of those rule changes are. And LJ, are we predicting that prices are about to take off?
It's time. I know we've been talking about it for a little while now, but now that interest rates have come down, obviously there was the lead indicators and now the lagging ones that are about to come. So now that interest rates have come down, we're seeing it. Prices are about to start taking off. I don't think it's going to be quite what we saw in COVID, but if you're looking to make a move in the next year or so, please book an appointment to discuss what your options are now, because if we can prepare for it now, you're going to be in much better shape. And even though you might pay a slightly higher interest rate compared to what you will in 6 months, the price differential I think is going to more than make up for it right now.
Which makes a lot of sense.
So what I'm hearing, Robin, from both Fred and from LJ, get off the bench, get in the game. If you're thinking of buying, you're thinking of selling, now's the time.
Put me in, coach.
You know what, guys? I mentioned on this show a few months ago that there was a house in my neighborhood that had been on the market for like 2 years and it was just not selling. I'd asked you, why is this happening? Like, it's a nice new build. Like, I don't understand. The house finally sold this summer.
Oh.
So to me, that's an indication that things are changing, because that house with a for sale sign for years finally sold. So that, to me, I mean, that's just one example, but that's my analysis of the market at this current moment. That's pretty much it for us for this week. A reminder that Under One Roof MTL can be heard live every Sunday at noon right here on CJD 800. If you want to learn more about the team and the show, you can visit our website at underoneroofmtl.com. You can direct all of your mortgage and real estate questions to info@underoneroofmtl.com, and we will try to answer them on the show. In the meantime, you can also reach out to LJ, Fred, and Martin individually. LJ, where can people go to reach you?
Check out our website, ljrealties.com, or on all socials with the handle LJ Aguinaga. That's LJAGUINAGA, or LJ Realties. You can also call or text me at 514-500-4040.
Fred, Martin, where can people reach you guys?
fredmartin.com. As simple as that, fredmartin.com. All our coordinates are on the website, and we're available 24/7.
24/7?
We are. So try us. Text us at 3 a.m. You'll probably get an answer.
At 6.
Love it. If you missed anything, you can listen to Under One Roof MTL in its entirety. As I mentioned, the show is available as a podcast on iHeartRadio, Spotify, Apple, wherever you get your podcasts. And the last thing we want to mention for this week is that there is a really cool event coming up. LJ, do you want to tell us a little bit about it?
Yeah, so in association with the Canadian Real Estate Investor Podcast, the Montreal meetup will be held on Tuesday, October 8th at 6 p.m. at the Burgundy Lion on Notre Dame Street. Feel free to stop by and discuss real estate with like-minded individuals. For more info, head to meetup.com/Montreal-real-estate. Both Fred and myself will be there. Stop by and say hi, grab a beer, grab some appetizers, and let's talk real estate. Let's talk about making your next move, your next investment, and what that looks like.
Very cool. For LJ, Fred, and Martin, I'm Robin. This has been Under One Roof MTL.
Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.